Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, my name is Rohadatul Aisy and I'm here as the moderator representing Group 1. Today we are going to represent our discussion on analysis of the financial report of the Ministry of State on Enterprises (BUMN) for the year 2024. In this session, I'll briefly introduce the topic and guide the flow of our presentation. After the explanation, we'll move to the conclusion part. So, without any further ado, let's start our presentation.
Okay, for the introduction, the Ministry of State-owned enterprise plays a strategic role in national economic development, fulfilling social function, and maintaining national economic stability. The consolidated asset of state-owned enterprise have grown to 10,950 trillion rupiah in 2024. The analysis of the Ministry of State-owned enterprise financial report for 2023 and 2024 aims to provide a comprehensive overview of the strengths and weakness of public financial management within the Ministry of State-owned enterprise. One first that will be explained by my partner.
Okay, everyone. In this part, I will explain the comparison of revenue and expenditure in 2023 and 2024 based on the SOE Ministry Budget Realization Report. As we can see in the chart, both revenue and expenditure increased in 2024 compared to 2023. For revenue and grants, the realization reached 108%, which is a good sign because the ministry earned more than what was planned. And then for expenditure, in 2024, the ministry had a budget of around 308 trillion rupiah, and the actual spending reached about 297 trillion rupiah, or 96% of the plan, even though this is a bit lower than in 2023, but it still shows that the ministry managed to use its budget efficiently and avoided overspending.
Okay, I will present about statement of budget realization. Can you scroll down, please? Okay, for these two graphs, we can see the budget realization of the Ministry of State-owned enterprises in 2024. Overall, the realization performance is very good, with most categories close to 100%. For employee compensation and goods and service expenditure, the realization is around 97 to 98%, showing that the ministry managed its spending effectively. Capital expenditure also reached out about 90 to 99%, meaning most planned projects were successfully carried out. The most noticeable difference is in non-tax revenue. In this first graph, it's around 108%, but in the second one, it jumps to 297%. This indicates a significant overachievement, possibly for higher dividends or additional income from state-owned companies. In conclusion, the data show that the Ministry of State-owned enterprises performance efficiently in 2024 with excellent budget management and strong financial realization across almost all categories. The next material will be delivered by my friends.
Based on the comparative graph of the operational reports of the Ministry of State-owned enterprises for the year 2023 and 2024, there was an increase in operating revenue of 13.29%, indicating improved performance in terms of non-tax state income. However, total operating expense also rose by 11.66%, driven by higher employee as well as goods and service costs. These conditions show that expenditure efficiency must continue to be strong so that the increase in revenue is not offset by an excessive rise in cost. On the non-operational side, the highest increase occurred in the surplus or deficit from the disposal of fixed asset, which surged by 97.60%. This rise indicates better optimization of non-productive asset. Meanwhile, the surplus from other non-operating activities also increased by 75.51%, signal that additional income sources outside the main activities are expanding. Overall, despite the increase in revenue and non-operating surplus, the total operating deficit still rose by 11.55%. This means that cost efficiency management remains a key challenge.
Next, we move on to the statement of financial position in value on the left. From the chart shown on the top, we can see that that in terms of number, both asset and equity reach around 2 trillion rupiah, while liabilities are not even close to 100 billion rupiah. In the chart below, we can see that the most of assets are made of fixed assets like lands, building, vehicle, etc. Here we can also see that the state-owned enterprise ministry liabilities have no long-term liabilities. If you notice, between liabilities and current liabilities, both show a visible difference, which is us to the next graph. On the next graph to the right, we can see that the goal of each financial position component in percentage. Liabilities and exchange and current liabilities show a 200% increase, only second to the other asset that 360% increase. Besides that, both fixed asset and investment properties show a very small change, which explained by the high surplus or deficit of this disposal of non-current asset above. Current asset show a slightly lower than 25% increase. Equity shows almost 0% increase. Next, we move to asset proportion. Okay. Okay, as you can see, fixed assets show a dominant proportion of higher than 95% of all assets. In 2023, not a single other asset actually show 1% proportion to the total assets. This was purely round up number, the second largest proportion being investment properties. In 2024, the significant increase in other assets and significant decrease in fixed asset result in the new sector we see on the graph below, with fixed asset still around 95%. On the other end of accounting question is liabilities and equity, and their proportion is shown on the right. Equity making up around 98 to 99% of the other side to be expected, seeing how for their numbers. But liabilities 200% increase and equity is less than 1% increase early, chances sector of proportion to nothing too significant in the full picture. Next year will be explained by my partner.
Okay, next up, here we can see the working capital of Ministry of State-owned enterprise in both 2023 and 2024. Working capital itself is calculated by subtracting current liabilities from current assets. Here we can see working capital of the ministry is in the negative. This is probably due to the deficit of its operation is financed by other entity through the account of by the name of ditagihkan ke entitas lain or billed to another entity. Next up, here we can see financial ratio analysis. There is three ratio in financial ratio analysis. With the first one is liquidity ratio, which indicates the entity's ability to pay its short-term or current liabilities. Here we can see that the ratio is less than 1:1, which means that the ability of the ministry to pay its current liabilities is very low. The next one is solvency, which indicates the entity's ability to pay off all of its liabilities, so short and long term. Here we can see it's for around 48:1 in 2024 and more than 150:1 in 2023, which could be said that it was too solvent. The third ratio is liabilities ratio, comparing it to both equity or capital and capital assets, which includes fixed asset, investment, and intangible. Here we can see that in comparison, liabilities is about 2% or 20% or 7% from equity and capital asset.
For the solution is to improve next year's performance, the Ministry of State-owned enterprise ministries should optimize idle assets through private partnerships, digitalize asset appraisal and rental system for transparency, apply performance-based budgeting and standard budget evaluation to minimize leftover funds and boost efficiency.
And now we came to the conclusion. State-owned enterprise ministries financial shows a number of issues and problems that are relevant. In order to combat this, there is some steps that needs to be taken by the ministry, such as partnership, digitalization, performance-based budgeting, and other things. We hope that this would help save the ministry's operation from tedious bureaucracy and raise the quality of the ministry's finance.
Okay, that's all from us, and wassalamualaikum warahmatullahi wabarakatuh.